Wow, we have a lot to talk about today in this video. Not only did the S&P 500 break its uptrend that's remained intact since October of 2023, you remember that low from last year, but also Warren Buffett sold about half of his position in Apple. So Berkshire Hathaway sold quite a bit. This is a very substantial cut to his overall position that he has in Apple and just his portfolio in general. So definitely there's a reason why he wants all that cash right now. It's a bit more defensive, which could lead to something happening here in the future, maybe even what we're starting to see right now with the S&P 500. And then also what I want to talk about in today's video is some of the trades that we saw last week on Friday, because there was this huge, if you go all the way back down to early on in the session, there was a huge $2.5 million out the money call order for a 0-day expiration. This was for Friday's expiration. And you might think because of all the downside that happened on Friday, this person probably lost a ton of their position. Well, funny enough, this person actually made 40% in 3 minutes just based on this order alone. And I want to go into how they did that on such a drastic down day and how you could also identify when someone like this closes their order. So a lot to talk about. Those are the 3 main topics I'm going to go over. First off, obviously, S&P 500 here, huge breakdown of this uptrend that it's been within so far. And until bulls can get back above this uptrend or previous uptrend, they're going to have a lot more difficulty. They're not going to see rallies kind of like what we saw from back here as much. You're going to see more so volatility remain heightened. And what we saw, if you go over to VIX just really quickly here, what we saw on Friday was crazy. It went all the way up to almost 30 on the VIX. So this is actually something we've been talking about now for a couple weeks, because there was a valid downtrend. If you remember referencing that over here from 3 weeks ago, if you remember that video, and we referenced this downtrend and we finally got that breakout. Now, in all honesty, I did not expect us to go up to 30 in such a short amount of time. However, there are a lot of people that don't believe that technical analysis works on the VIX, and I'd agree that it's not necessarily the same as an individual ticker like Apple or Microsoft, but it's pretty hard to negate something like this where we had a daily close above and it just had continuation higher. So this was a key downtrend break, and we saw volatility just continue super, super high on Friday. So a lot of fear in the market so far, especially after, like I showed you, the S&P 500 broke under this uptrend, but then there's a variety of other fundamental aspects. Now the market's pricing in like 4 rate cuts for 2024, and before it was like 1 rate cut and a 50% chance at a second. So a lot of things happened last week, and we can expect that continuation of that theme of a lot of things happening going into this week, which brings excess volatility as well as opportunity, as I like to say. So going into trade setups for this week based on the S&P 500, I want to see what we saw from over here. I want to see how this potential bear flag plays out. And what do I mean by bear flag? Well, we actually have a bear flag right here on the 50-minute chart. You can see just based on how price traded on Friday, you can see that there is a bear flag here, and this is the pull, and then we had the consolidation over here. So as long as it remains contained, we can see some type of a breakdown afterwards. So if we do get that breakdown, I'm personally going to be interested in a couple levels, or at least an area of a couple levels. And the reason I have those levels, or at least one of the reasons I have these levels, is because of price action from over here. So first off, I really like how we had this low from over here in this previous range, as well as what turned into a resistance after it broke below. And you can see here it's been respected many times. It was respected over here as well. I also like it because it's almost 525, so that's a whole number, and then a middle whole number as well, which tends to act as a little bit more so of a support when it's retested after a long time. So 524.90 is something that I'm looking at. As long as it can hold there, there is potential for a bid. And then the second level that I have here is 522.57 from this area. Since we've had numerous rejections, finally broke out above, saw continuation, came down, and it was able to act as basically an inverse head and shoulder, where we had the left shoulder and the right shoulder here as a support. So I like both of these levels. If this does sell from where we are right now because of this bear flag and we get into this range, I'm interested in some type of a long position. Now, with volatility being so high, you do want to make sure you have good risk mitigation in place, as you always should. But something like a close under 522.57 on the hourly would negate a potential long setup here. So we're going to see what happens going into this week. This is my area of interest, though, and this also would pair nicely with a expected move of this bear flag because of the pull that we had from over here. you can expect some type of an extension move to around 525, 526-ish if it does break down from here. So that's why I'm interested as well around this range here in longs. And then also, like I said, I wanted to talk about Apple in this video. Apple's remained pretty strong, all things considered. I'm not going to lie. I'm actually impressed. I'm actually impressed considering how much Warren Buffett sold as of recently, and also how much of the correction we've seen in the S&P 500 as well as tech, and mainly tech, has been the culprit for this correction. But it's remained pretty resilient so far. I do like how it's actually been able to stay above this previous supply zone from over here. If you remember in previous videos, I spoke about this range. So essentially what we had was a demand zone down here, and then we had a supply zone up here, both of these blue ranges. It finally broke above over here during the Apple event. If you remember that on June 11th, I believe. June 11th from over here. Finally broke above, and so far it hasn't even retested it. It just remained above. So personally, as long as it stays above this range over here, this previous supply zone, I'm actually macro bullish on it. So it is possible we have some downside, and it looks like there's potential of a head and shoulder pattern here. So it is certainly possible we can go down and retest 200, 201, somewhere around there. However, unlike some of the other Mag 7 tickers like Amazon, for example, this one has remained relatively strong so far, especially with what I said with Warren Buffett selling quite a bit of his shares. So this one doesn't look too bad from a macro sense. And yes, like I said, there's potential for a head and shoulder setup here. So if you want to trade the short term, you do want to see it stay below 224.50 roughly. You can stay below there. There is potential for an extension move down to 206 and then eventually 200 if we do have that head and shoulder play out. So this would be the left shoulder, the head, and then the right shoulder here. So if you're bearish for the short term, want to swing something like that, that's a setup that I'm watching. However, like I said, macro wise, as long as we remain above this, what's now a demand zone, it looks relatively good for that continuation move if it is able to retest or just stay above. So I saw a lot of people on social media scared that Warren Buffett sold quite a bit, and that's definitely alarming to a degree, at least for the market. But if you're just focused on Apple here and focused on the technicals, I'm actually not that worried yet. If we did break below this range over here and fell back into the previous range, then that'd be very concerning. And you could see a huge head and shoulder pattern where this would be the left shoulder, this would be the head, and then a right shoulder forming. But that's a long way away from where we are right now. And as long as you remain above, then I'm not too concerned with Apple. So that's my personal thoughts on it. You can think what you want based on that. And then the last thing I did want to mention is this setup, like I said earlier on in the video, $2.5 million in premium for the 535 strike on the S&P 500 for those 0-day expiration contracts. So I'm going to go back here on the 5-minute chart. I'm going to show you what happened early on and how you can use something like this and just leverage order flow like this to your advantage in trading. So we had this print come in. Let's see, this was 9:35. So this was pretty much out of the gates in the open, because you could see here one of the first orders, and this was 5 minutes or so after the opening bell. So we can go look over to here and see that this was right as this huge green candle had upside over here. And that was basically the only upside that we got, other than these minor bounces after. But if we go even closer and look at it from the 1-minute chart, we can see here that this whale, remember they added at 9:35 a.m. This whale added at the exact low at the time. So they added at the low, as we can see up here, at 9:35 and 10 seconds. $2.5 million worth of premium, and this was significantly over the existing open interest if you look at the volume, since this is a size of 10,086 contracts compared to the existing open interest of 420 contracts. So we know because of that it is a buy, and they also got this above the ask, so that shows some type of urgency, and they got this at 9:35 like I said. Well, in the subsequent 5, 6, 7 minutes after they initiated this position, we saw a nice upside move, and it actually went all the way up to 40%. And what's interesting about that is we can see over here we had the same strike, the same expiration, and also relatively same amount of contracts, all things considered. But this was also what would be considered a buy on cheddar flow with an ask. However, this is when you really have to look a little bit more in depth and use this feature right here, the order details feature, because this was actually a sell. It came in at the ask, which technically speaking, it's more likely to see a buy with something like this on a call order. However, look at the implied volatility here. This is what I really want to make sure you guys understand, because order flow isn't just always, if it's at the ask, it's a buy. If it's at the bid, it's a sell. You can see here, 45.93% implied volatility. Well, actually, this entry that they had, the 2.5 million over here, the implied volatility was 46%. And when a whale, especially a whale, enters a position like this on these contracts, which only had an existing open interest of 420, they actually move the implied volatility. So remember, 46% here in order details, and we had over here 45.93%. So that's not an insane amount. And yes, volatility was moving as well. However, because this was the same order, essentially, or the same whale with a similar amount of contracts, and we saw the implied volatility drop on this position after we saw this come in about 9:40, so only 5 minutes later, one can assume that this was actually a sell position because of that. And now we can also look at open interest on Monday to see if that was the case, because there was no sign of them selling afterwards. So this over here, it may seem a bit difficult to look for something like this. However, it really isn't. You can just look at something like the order details over here, gauge based on implied volatility, and then also leverage the fact that this had a very similar size to this order over here, and then some type of context as well. They bought at 9:35, which was the exact low. Well, they also sold around here at 9:40, 5 minutes later, which ended up being the exact high. And of course, maybe at the time you wouldn't have known that, but it never was surpassed afterwards. And it's unlikely that they would buy into this over here. And typically you're going to see that IV spike going into a pump like this. So the fact that it dropped going into this pump, yes, you could also argue that the VIX would be dropping during this time period. However, it'd be very unlikely that the whale would add into their position when it's already up 40%. Up here. So something like this is how I can tell when they're selling that position. It's, again, the same strike. It's the same expiration, pretty much the same size on this. So in this case here, they did sell that position as it was appreciating. And good thing they did, because of what we saw over here ended up being the high. So they got the low of day at the time, and then just about the high of day at the time. And then it never saw higher afterwards, just fell down. So very interesting setup here. Of course, it's a bit more complex than just looking at, oh, it's at the ask, so it has to be a buy. In this case, this is only a general reference tool here on Cheddar Flow. Sometimes you're going to have to look a little bit more in depth, but for all intents and purposes here, if you looked at the first order that we saw, 2.5 million at 9:35 a.m., that was the low of day. So good confirmation bias, at least if you were interested in longs at the time. But then also it's always good to reference later on to see if they are selling that position, just in case they expect some type of downside afterwards. So that's very interesting setup we had here. Very rare to see someone make that much in such a short period of time, and then as well as the fact that it was a very red day, they were able to make money on the long side. But just wanted to share that here since it's a relatively unusual order, and I'm sure we'll see it at some point again in the future. So always good to reference something like implied volatility and using context clues to gauge and just get an understanding of what the whale is doing. Regardless, very interesting week ahead of us, especially with volatility so high. So I'm excited for it. Hope you are as well. And I'll see you guys in the next video.